Traders, Cousin Benny coming to you from theclosingprint.com, July 24th, 2022. In this edition of your weekend video newsletter, we'll discuss all of the indices, both U.S. domestic and international, that moved higher last week. Our leaders also moving higher, with the majority of our indicators bullish at 15, neutral at 3, and bearish at 2 going into this week. S&P 500 support 3,800 and resistance is at 4,000. We did note that the vol trigger and zero gamma moved higher this week. A couple of weeks ago, we were looking for S&P 500 to move above its 9 and 21 day and for the 9 and 21 day to cross. We were then looking for price to move above the 50 day and for the moving averages to follow. That's what happened last week with the exception of the moving averages. Now we're looking for the 90 EMA to cross up through the 50 day this week. We started a little fade on Friday. There's a possibility we could do a couple of different things. Either we're going to move sideways in time or we're going to pull back in price. We could also follow through, of course. 382 Fibonacci, not putting too much emphasis on that. If we fail before we get to 382, that would show the markets aren't as strong as we believe it is. If we get to the 50% retracement, however, that would signify a strong markets. Then we'd look for a higher low and potentially a move up to the 200-day moving average overhead. Bottom line, we have 15 bullish indicators, so there's more of a possibility of at least consolidation sideways in time or a follow through. We also have to wait for a solid bullish setup on Monday. In last weekend's video, we did note that the Qs had not undercut the late June low, made a higher low. We were looking for a push above the 50 day. Of course, we got that last week. We made it to the 382 Fibonacci level, with RSI moving back above 50 and MACD staying above its signal line. Stochastics is now embedded with major resistance at this volume by price line overhead just over the 618 Fibonacci taken from the March 24th high down to the recent low. A significant level of resistance right around that 340 level. We also took notice of the volume McClellan summation index on the NASDAQ, which was turning over the last few weeks. We started to see a change in direction, RSI rising, suggesting that there could be a follow-through. As an example, we compared that to the S&P 500 volume McClellan summation index, which has just started to get its legs from a double bottom, looking for a follow through. So if this also turns up in addition to the NASDAQ, we could have a case for a follow through versus a pullback in the short term. The S&P equal weight index is still on a buy signal. However, we're starting to show signs of potentially fading at the present time. So we'll have to watch for either a flag, a pullback, or a break higher starting on Monday, Tuesday. For now, this index is neutral. We see the same thing in the ARCA Institutional Index. This is 75 stocks that most institutions have in their core portfolios. We saw a blue elder stick on Friday that's telling us to pause, reassess this week, look for strength or weakness, and trade that direction in the short term. This index is neutral at present. The IWM Russell 2000, a broad measure of market participation in the small cap arena, has started to turn. We see the Kopach curve turning up as well, indicating that we could see a follow through this week, while the Wilshire 5000, an even broader measure of market participation, is starting to turn as well, leaving us with a more bullish setup. However, given the recent run-up over the last few weeks, we really need to wait for a clear directional setup on Monday and Tuesday, especially given FOMC this week. For now, we're neutral to bullish, and we'll wait for a verdict as we start to trade on Monday. Growth and value stocks show a series of higher highs and higher lows. We are back above the 21 period moving average. That's bullish. Breadth had yet to make it back to plus 30%, so we're not at exhaustion levels yet. However, in the lower panel, you can see the NASDAQ did make it to that level. Remember the summation index of volume. NASDAQ is a bit hot, if you will, but could see more follow through. Expecting maybe we see a little flag to start the week. Then we'll reassess on Monday and Tuesday. We also noted that multiples had finally started to bounce. We got down to 19 on the PE on the S&P 500, starting to bounce, showing an indication we could see a follow through this week. While the bullish percent proceeds higher, we have yet to make it back to 50%, so that's a potential for follow through as well. Put call ratio also started to move higher, so we need to watch that on Monday. And we need to see advanced decline improving. We need another higher high and higher low. In addition to the number of new highs minus new lows, NYHL needs to get above the zero line, and the moving average needs to continue higher. In addition, VIX starts the week on a green signal. As long as this is moving higher and green, we're looking for higher highs and higher lows on a 60-minute time frame, this being the S&P 500. With volatility falling off over the last several weeks, looking for a retest of this low back in March, where the markets peaked on March 24th, which would give us further evidence of a potential follow-through. It all depends on FOMC and how the markets react to the Fed's speak on Wednesday. Finally, I'll leave you with this. The number of bulls versus bears, the AAII bull-bear ratio, had reached a low below that of 1990 and contracted over the last 2 weeks. We were a week below the 2009 low as well. We've now contracted back in the other direction like a rubber band, snapping back to equilibrium. If this starts to turn markedly, it could indicate that we have more bears capitulating. I wouldn't look at it as anything more at the present time, but if it does turn, it had marked previous follow-throughs that lasted for years thereafter. 1990, that lasted to 2000, of course, with a few drawdowns along the way. And of course, in 2009, into the present secular bull market that we've been in since that time. So this indication is under development, and we will watch for it over the next several weeks into year end. Looking at the 10-year yield, we appear to be in a head and shoulders top. We'd like to see the 10-year moderate in this level, not fall off, as that could indicate further weakness in the markets. We'd rather see the 10-year moderate in this level, and we'd also like to see junk bonds and high yield corporate on the weekly time frame, as you see here, continue to move higher. That would be bullish for equities. As we see the 10 and 20-year yields moving lower, of course, TLT has started moving higher. It appears to be basing with a potential for higher highs and higher lows in the short term, while junk bonds continue to move higher as well. We also saw IBB attempting a higher high last week. We did finish on a lower high. That needs to change. We'd like to see IBB continue this week, along with small caps. You recall the Kopach curve, which was turning higher on the weekly time frame for both small caps and the Wilshire 5000. That needs to continue higher with higher highs and higher lows. Would also like to see crude oil fading a bit more, and for the Bitcoin to get back above 24,500, 25,000 this week. It's been strong this weekend, with some of the coins doubling, like Bond X, which we've been trading on Coinbase. From last week on the 16th, this one's managed a double twice with a limit order getting filled over the weekend at 22.50. So currently I'm out of this, looking for a consolidation similar to the previous one back on the 21st. For now, we're looking for Bitcoin to continue higher. We're also watching for the US dollar to fade. If we can manage a bit more weakness, this should help the growth stocks as well with their exports to international markets. And with the lower dollar, we could see copper bounce a bit more than it did last week. Look for a follow through in copper. This is a leading economic indicator. We'd like to see this moving higher. With all the flooding and crazy weather we've had over the weekend, there'll be a lot of rebuilding. So there's a possibility copper could start to make higher highs and higher lows. And with that strength in copper, or vice versa, the builders, as we see here with nail, continuing along a path appearing to start phase 2, the markup period, with volume increasing, looking for builders to continue to improve this week. We're also watching crude oil, West Texas in this case, fading again for a 6th week, along with the commodities CRB index, which faded for 6 weeks, did try to make a new high, but faded into the end of the week. So we're looking for this to continue, helping equities in the short term. Most sectors are consolidating. We did see real estate make a move back above the 50-day. 21-day looks like it's going to cross up. We also saw strength in tech last week, looking for a consolidation. Consumer staples, we have a 21-day, 50-day cross. That looks pretty good. For the most part, sectors look pretty good going into this week. The idea of consolidation in time makes sense. We could pull back a little bit. For now, sectors are telling us to wait for a good setup on Monday and reassess the markets at that time. We did note a directional change in the equal weight consumer discretionary versus equal weight consumer staples. This is moving higher. That's bullish for equities when that happens. Obviously, we've been descending since late November, early December. That was bearish for equities. Now the reverse is the case. This continues higher. That would be short-term indication that we should be bullish and look for follow-through into year-end. If it starts to turn down and this becomes a lower high, we get a lower low, of course that would change our assessment and we become more bearish again in the short term. If you're playing the Russell, this is the small cap sectors. There are 9 of them. For the most part, these look pretty strong. With materials and energy, the only small cap sectors below the 50-day. International indices, we see ACWI, the all world index excluding US, is above its 50-day moving average. We did note that India and Japan are both above the 50-day. EWJ, Japan, faring better in the short term, with India rising above its 50-day last week. India is very strong. Look for a follow-through this week. Its Kopak curve is signaling potential higher highs into year-end. So if you're thinking about trading international indices, make sure you check out India and Japan. Once again, for the week ahead, make sure you check out the stocks that gained during the last recession. If you think that's going to happen again, make sure you check out this group of stocks. IBD 50, these stocks are set up looking for a follow-through. We had fewer stocks on the relative strength line at new highs scan, but we did have some candidates show up on our scans this week that could follow through in the third line below. BJ's wholesale from the IBD 50 consolidating, producing what looks like a handle after a cup formed, looking for a follow through and a breakout on above average volume. We'll also watch Costco, Walmart, Target, and Dollar Tree, all of those moving higher last week, with Walmart trending. 9 and 21 have crossed up through the 50-day moving average, with Target situated right at the 50-day, looking for consolidation here and for the 9 and 21 day to cross up. Notice the volume by price bands indicating this is a base, looking for phase 2 to start. That's where we see the 9 and 21 day crossing up and price staying above for the most part. Higher highs and higher lows. As the markup continues, we're looking to fill this gap back up to 210 in short order. So look for these discount retailers to perform this week as we let you know our trade assumptions during the live session. Eli Lilly consolidating over the last few weeks, looking for follow through this week. Volume suggesting institutions have been picking up shares and accumulating over the last 6 weeks. As we wait for MACD to turn back up, stochastics is set up. If that starts moving higher along with MACD, look for a follow through in Lilly to confirm. AutoZone and other auto parts stores are seeing bullish price action, looking for a follow through in AutoZone and GPC, which broke out of a cup and handle pattern last week. GPC is on the IBD 50, looking for a follow through. You can see RS line is at 93. It does have earnings this week, so be aware of it. Note the progression in earnings going back to 2015 continues to improve every year, while the company has a composite rating of 98. Humana is still in a buy zone, looking for a break above 500. The company has a growth rate of 14% and a composite rating of 98. Stellar earnings projected to be 19% higher this year and 12% higher in 2023, with a group relative strength rating of A+. In the Managed Healthcare Services Group, IMXI, International Money Express, noted the relative strength line climbing last week. It's at 98. As the stock breaks out, we're looking for a follow through. It does have earnings in less than 2 weeks. It's been trading on above average volume as of late. Good earnings and a growth rate of 60% with a composite rating of 97 and a group relative strength of C+. We'd like to see that a bit higher, with an accumulation distribution rating of A+, telling you institutions are accumulating shares. Jack Henry is a stock that we've been highlighting over the last couple of weeks. It was on last week's watch list. It develops integrated data processing platforms that manage transactions for over 8,400 financial institutions. Its relative strength line is on the blue dot scan again this week at 93 and climbing, making a new 52-week high. When the two are combined, a new 52-week high and price action ready to break out, coming out of a base, that's when it shows up on the blue dot scan, with earnings of $4.84, estimated to be 17% above 2021 by year end. And in 2023, we see earnings growing to $5.27. Looking for this to follow through in the short term. Murphy USA also on the IBD 50 this week. It markets retail motor fuel products and convenience merchandise through retail stations in 27 states. Relative strength line did dip a little bit last week. We're looking for that to start to motor higher again. Looking for a follow through and a breakout out of this flat base to higher highs. Note the earnings and note the growth rate of 34% with a composite rating of 99. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com, July 24th, 2022. In addition, watch these stocks below as they are set up and ready to follow through this week as well. I'll send out a watch list later tonight around 12 midnight on the East Coast, around 9 o'clock on the West Coast. It is my wife's birthday, so I want to make sure to get out and do something special with her. Take care, everyone. Enjoy the rest of your weekend, and we'll see you in the morning. Ciao.